Welcome to the Homeward Bound podcast by the Mortgage Guys, your ultimate guide to navigating home buying and mortgage lending. Whether you're searching for your first home or settling into your forever home, we're here to make the journey simple, clear, and exciting, helping you secure your dreams one home at a time.
Well, here we go. The time is officially here. We're going to get this podcast rolling. Kyle, this has been a long time coming to get this thing started and put together. I'm glad we're doing it. It's fun to sit here and chat about what we do all day, every day. But real quick, what a week this has been, especially today in the rate market.
It's nuts. I mean, it's a hard enough environment on its own. You never know where rates are going to be. It's like you wake up in the morning, and I'm glad we have that app on our phones that tells us what's going on in the market. I try not to be like this crazy guy checking my phone every day, all day, every minute, especially when I get up, because my family's like, what are you doing? Are you looking at Facebook again? What's going on? And I'm like, no, I'm checking rates. But it's a drama thing, man. Constantly wondering what's going to happen, what news is going to come out today to make things shake up for the better or the worse.
And it's like a mood swing. I mean, you wake up, our first report comes out, 7 o'clock our time? We get our first one, and it sits there and says what the market's opening at. In our market, obviously, we're talking mortgage-backed security in the bond market, and which is driving our interest rates. And like this morning, it looked, let me remember, this morning's been volatile. It opened up negative. And we were bumming, bad mood. And then what happened today? Fed speaks?
So I was like, yeah, another one of those days. Rates are going to be, who knows? But yeah, then all of a sudden, it's a Fed day. It's Fed day. And you wonder what kind of drama is going to shake out if things that shouldn't be said are said in the Fed market. What's going to happen?
Yeah, and it went from negative, and then all of a sudden 10 o'clock it's positive, and then it's negative again, and then positive again, and I think we're negative again now. So it's been all over the place. Up one. Hey, that's no blood almost.
And the interesting thing and this is the mortgage-backed security market that we're looking at, which is inverse to rates. And so we like to see the green on the screen. We like to see that go up because it's the inverse. With that going up, rates actually trend down. Yeah. And honestly, it's been nice to see more green on the screen, more positive momentum in the mortgage-backed securities than we had,
And obviously, it's like the loaded question that we get all day, every day. Everybody asks us, hey, what are rates today? Is that the most broad question that you ever asked? I mean, what are rates today? And that can mean everything from different down payments, different hitting credit scores by the borrower. So it's kind of a very impossible. It's a very short question that has the longest narrative answer that you could ever imagine. So, I mean, you and I have been working together now for a little over 5 years, but together collectively, I think we are totaling up. We have over 40 years experience in the mortgage industry.
Pretty awesome.
Yeah, which is great. But I have to say, and I'll ask you, I mean, don't you think the last, give it 2 years, 3 years have been some of the craziest times we've seen? Yeah,
absolutely. I coupled with inflation, everybody's felt the pain in their pocket for sure. But it's odd that, with rates going up, values keep going up too.
Yeah.
And it's hard because consumers want to buy a home. They want to buy their first home.
Yeah.
Or they want to transition to that next home after they bought the first home because they're getting cramped. They bought a 3-bedroom. Now they need a 4 or a 5. Need that extra bedroom or bathroom, and they want to finish that basement or whatever it is. And they feel like they're in a position where they can't. And you and I have been, like you said, in this business for quite a while, and it's been really, really awesome to see those borrowers and say, this is very possible, and this is how we can do it. Mm-hmm. And it's amazing to see the change in the look on their faces when you tell them that.
Yeah. And obviously, everybody wants to be the good guy, right? And bring the bearer of good news, not having the bad news. And it's one of the situations where at least we still have ways to get people in these homes that are a little higher priced today than they used to be.
Yeah.
But what does that mean for tomorrow? I mean, if history repeats itself, these values could and may just continue to rise. We like to plan for that because that's kind of the way it's been going, but you never know. I think there's going to be peaks and valleys. Hopefully, with the programs being that we have available to us and interest rates not being out of sight right now, we can still get people in for reasonable payments, which is a good thing.
It is. And, going back to your question about, what's my rate or what are rates today? Rates are individual.
Yeah.
Credit scores everything. You know, what kind of home you're buying? Because if you're buying a stick-built single-family dwelling on a 1/4 acre compared to a manufactured house on 20 acres, you're talking about two different products. You're talking about two different loans. It can be completely different. And the other question we always get is, well, what are rates going to do in the future?
Yeah.
And, you know, we get days like today where the Fed meets, and luckily they didn't change rates. They didn't change the Fed funds rate, but the plan is, and it was to change rates 4 times this next year, or 5 maybe.
Yeah.
Then it went to 0, no changes the last time they met. And today they come back and say, oh, we're going to maybe do it 2 times.
2 times.
And so we don't know what rates are going to do.
Yeah.
Crystal
we
ball
never
is
do.
broken.
We're always on pins and needles. We go to bed the night before a Fed announcement and wondering, did we get everybody locked? Should we lock? Should we float?
That's right.
The lock versus float debacle that we deal with is, I don't wish it upon anybody, but it's, 'cause, you know, we're the ones that are helping these people get the best rate possible during that loan process. And it can be a challenge. It's a juggling act. But as far as, I was going to ask you, you know, stepping off of rates real quick, you talked about first-time home buyers, and what's your favorite, Kyle, over the years that you've dealt with? What's your favorite type of scenario or borrower that you deal with?
Honestly, I've got 2. First-time home buyers are absolutely my favorite.
And why is that?
You know, they come in with an energy and an uncertainty that you don't have after they get their subsequent homes. They want to make sure that they find a loan officer that knows what they're doing. They want to find a loan officer that's going to take care of them. And they you know, there's a lot of things that are required to get a loan done. And so you say, we need X, Y, and Z. Can you bring it in? And it's there.
Yeah.
Most often it's immediately there, and you can get their loans done so quick. Because you and I both know a loan can go as fast as the borrower or the client will let us get it done.
Yep.
You know, the second type of loan that I love doing is I love construction loans. I think they're incredibly fun. They're a little more complicated, more complex, but that complexity is fun because you're helping a borrower or a client plan on the build of a home, or you're appraising a home as if it was finished. You're looking at this home as if it was finished. It's not finished yet.
Yeah.
It's not there, and they may not even own their land yet.
Yeah.
But it starts to create these awesome dreams in your client's eyes of, I'm going to build a home, and it's going to look like this, and then you're helping them get along the way. So, yeah, those 2 more emotional type of situation, and they're fun in every right.
Yeah, I agree with you. I think on the construction loan, the construction lending side of it, it's so unique and it's so fun because we're kind of with them rather than it being that short transaction, you know, that transaction that's really only, you know, 30 to 45 days, some cases 20 days, as short as 20 days. Construction loans are a little bit longer process, as you mentioned.
Yeah.
They're a little bit more drawn out. And then you have the course of construction that's also part of it. So you get the loan in place, and they're not just clients that are customers for that transaction. You're with them all the way till the end, keeping tabs on how the house is going, because that ultimately that construction loan is going to convert into that permanent mortgage. And it's not like you just say, hey, okay, we got you started, you're building, you're out of there. You're working with them all the way to the end. And you see the excitement as they see every step of that thing.
Yeah.
It's framed. It looks like a house. They always say that, hey, it's starting to look like a house. You hear that all the time. And then they get all the way through where they can smell that new carpet smell, and maybe it's the new plumbing fixtures and all the different choices they made. And they just really love seeing that brand new product.
Yep. And I think one of the fun things for me is, you know, in building that relationship, and we try hard to build that relationship with every client, right? That's important. We want to make sure that they know we're very much engaged and invested in whatever their dreams are. But building a home, that's months. That's months where you get to connect and talk, and they ask you how things are going on your side. We ask how things are going on their side. There's a lot of times I'll go drive by the home and see how it's going, and hey, send a quick text, you know, like, hey, so and so, you got trusses up there. Like, this is awesome. There's some shape. This looks so great, and that makes them excited. Makes me excited. Building a home is fun, and you know, the cool thing is we've got great products to do that. Our one-time close is a true one-time close. It is a sign and you're done. You've locked your rate. Everything's done. You don't have to worry about what happens if this happens or that happens. You're done.
Yeah, as far as done, I mean, you don't have to go back and requalify when the home is finished. I mean, how important is that? You know, if somebody has taken on maybe a little bit more debt, which obviously you shouldn't do that in the first place, but they don't have to requalify once the home is finished. So a true one-time close is that whole uncertainty or worry is pulled away from it. If the credit score were to change during the course of construction, a one-time close, it's all underwritten up front, and it's you don't have that fear of running into trouble with a finished house.
Well, not to mention the cost savings. I mean, most construction situations are set up where you do a construction loan on its own and a long-term loan on its own, and you pay twice on fees. And it is what it is. But if you can find a way to merge those two, where there's one set of fees, you're done, like you were talking about, and plus you save thousands of dollars. Yeah, that's pretty awesome.
They always say that the situation when you're building a home, it can be one of the most stressful things, but also one of the most gratifying things there is. It can be tough on a marriage, they say, because you're going through all that. We hear that all the time. But if you can take that uncertainty and that worry about having to qualify again down the road out of it, and they can just focus purely on let's get this home built and enjoy this process because the lending part is behind me now. What an awesome thing that is. Talk a little bit, Kyle. I was going to ask you, how important is it in the construction loan process to have a good quality builder and a good quality agent involved in it?
Both are paramount. In construction, having an agent that can understand what a client's needs are, because it's hard to visualize what people are talking about. It's hard to visualize kind of land they need or the type of land they need, whether that's an eighth of an acre or 10 acres. Being able to have an agent that can understand and visualize what you need and start searching for you on your behalf to find that setup for you, and then incorporate a builder that sees your vision as well. You have to find an agent that knows, that wants to do construction type of situations. Find a builder that knows how to see your vision as well. It's without that, you're going to be disappointed as a client.
And then one of the challenges also sometimes on the builder front is there's some wonderful builders out there that are great tradespeople, but it really takes to make this thing go off right in the construction loan financing part of it is a builder that can really cross the T's and dot the I's and take care of their paperwork and handle the draw requests and do their part to make sure the draw requests come through timely. I mean, they have a part in that as well. So I see what you're saying. Yeah,
I mean, construction loans are only good for so long, right? And so you've got 12 months to build a home. It's ample time. It's tons of time. There's a ton of builders that can build in 6 months. It used to be 4 months. I mean, it used to be 4 to 6 months was the norm, and now and then 2021 and 2022, shortage of materials and things, it pushed it from 9 months to around 10 months now. But it's getting better. Having a 12-month term is great, but if you have a builder that can't keep it together, can't get it organized, you're going to be pushing that 12-month mark. Plus, I mean, you're paying interest. Only on the funds that you actually draw, but if you can shorten that construction phase down, it can lessen your interest expense.
Well, let's talk a little bit about construction loans as far as the financing goes. People think they need to have a lot of money into it to do a construction loan. They think they need to have, tens of thousands, hundreds of thousands of dollars down in order to be able to build the house versus just go buy a house.
Yeah.
What's the reality there?
That's a good thing. I remember getting into this business and getting in a position to purchase a home. And thinking I had to come up with 20%. And back then, a really nice home was $200,000, which is not even a townhome anymore. It's really terrible. But, $200,000 home, and I thought, man, I've got to come up with $40,000 to put down. I quickly learned that's not the case, but with construction, with buying an existing home, you can get in with 3.5% and 5% down. And it's really cool that with the same down payment, you can buy or build your own home. 5% down, 3.5% down if you go with the FHA type of loan. It can be really affordable. And the cool thing is if you get a builder that can give you a budget, we can plug that in and say, hey, it looks like your down payment's going to be this. We can calculate an entire budget because it's a little different. Buying a home, you're agreeing on a price. Building a home, you're agreeing on a budget. And that can be a volley between you and the builder, trying to figure out, what do you want? What do you want to cut? What do you want to add? That's a moving target for a little while, but 5%.
That's phenomenal. I mean, because there's so many people out there, and hopefully some people that listen to this that it sheds some light on it. That reality is, like you just said, 5% down, and you could build your home. Let's talk a little bit about that other classification. You said first time home buyers.
Yeah.
I have some I was meeting with just yesterday, and they came in and they like most first time home buyers, they want to put zero down. And the reality of zero down is there are options for that. People need to understand that there are. We have Utah Housing, the USDA, and if they're a veteran, the best of all of them is VA, obviously, to do zero down options. But these folks, I'm working with them. They actually had a little bit of a bumpy past with their credit, and we see that all the time. And it's the nice thing about that is if there are credit issues with these borrowers, we have the opportunity within our office to do what we need to do to, give them recommendations. Hey, look, we can get your credit scores up. We can help you get your credit scores up by doing this rapid rescore, where we can increase your scores by 20, 30 points on each of the 3 bureaus. And that will equate to possibly an approval versus a decline. So, and that's what I'm working at with these folks, because they came in very uncertain, thinking, this might not be a possibility for us because we, had some missed payments in the past. And the nice thing is, the excitement that they feel when you can tell them, hey, it's not yes right now, but we can be there really quick and make this happen. And I love that about first-time home buyers, is they see that excitement. And when they find out, this applies to me.
Yep. Yeah, and the cool thing is that rapid rescore, so before coming on and working with you 5 years ago, over 5 years ago, that feels crazy cool to say. But the institution I was with, would not allow a rapid rescore.
Wow.
It was not available. And I remember plenty of times where a borrower would say, well, so-and-so can do a rapid rescore. I'm like, I don't even know what that is. Tell me about it. And they're like, well, they can bump my credit up 60 points. I'm like, I'm not sure I believe you.
Sounds fishy.
Yeah. Like, are you sure? Are you really sure? But having come over, being part of this team, it's cool because people have credit issues.
Yeah.
They've missed a payment because they didn't mean to or they did mean to. But either way, it's a missed payment. Yeah. Credit doesn't differentiate if you meant to or not. No. It's a black eye. And to be able to have the ability to say, oh, it looks like we can bump your credit up 60 points. With this, now you'll qualify for zero down or, a better interest rate. That's powerful.
Absolutely. And it's just so cool to see them to accomplish the dreams. And that's really what we're about here. It's helping people to get that dream of home ownership. And that's, it can be a grind sitting here going through this. This can be a real challenging business at times if you allow it to be. But if you can sit there and just, really, really notice the blessings and the good things and the happiness about people around you, it really, really helps you get through the day.
So with the hard things, it's funny because it closed on this, it was a construction deal, and it was a little, they had to give me a lot of information. Things were changing in their scenario. They were finishing the build. There was bills to get paid, make sure everything is done. Yeah. And, it's normal day to day for you and me. But at the end of all of this, when they're done signing documents and everything is done, they turned and looked at me and said, I don't know how you do this every day. That was exhausting. You do this every day? You've been doing it for 20 years? Old hat, this is good. You want to find a good guy or a good person that knows how to do loans and knows what that stress feels like, and it doesn't faze them.
Yeah. And you know what? I think a big part of that is our team, right?
Yeah.
I mean, you surround yourself with greatness. And I've always loved that phrase. I mean, there's a cool book that I read. It's about the gentleman that played for the Eagles, who are actually going to be in the Super Bowl this year. He wrote a book, and it was called Surround Yourself with Greatness. And I'll tell you what, there's so much to that. And I think that applies to our team right here. Our LOA and our processor that we have on staff here, they're phenomenal at making us and helping us to look good. Because let's face it, we can get caught up in the marketing end of it, the starting this new deal with meeting with these people, whatever it might be, where without the right team to kind of shore one another up and make sure the thing runs smooth.
Yeah. Honestly, you're 100% right, because anybody who thinks that they can do this job on their own doesn't know what this job means.
Yeah, absolutely.
And so, having the right people, I'm constantly amazed with who we have. I mean, our loan processor, we got some documents in from a client 10 o'clock at night one night. It was the last thing we needed to get the loan done. And then I got an email 5 minutes later that loan had been submitted for final review at 10 o'clock at night. And our processor lives in East Texas. I mean, she was up at midnight submitting loans to underwriting. Like, like go to bed.
I think we need to say that this is the exception, not the norm. But however, she does it so often that we can kind of say this is almost becoming the norm. So
yeah, she's amazing.
Yeah, as long as you have the right players, the ones that'll just dig in and work hard, and they know that we all have a common goal here, and that's to help these files get closed as quick as possible, so that those dreams that we talked about are met. I think it's just so important. But I think also equally is overall philosophy in the lending company that you use as far as their underwriting philosophies. Mm-hmm. And I think it's so important that I've worked in the past, you've worked in the past, obviously in the banking world when you worked there, and how the struggles that you did with underwriters only accepting files when every little condition was there. And if you didn't, and if you left a few things out, you almost got chastised by the underwriter. Now,
for real.
It's so refreshing that's not the case here. What do you want to say about that?
Well, there's power in underwriting, and a team that has an underwriter that is two things. Dedicated to you as your underwriter, because you build a relationship with them. Mm-hmm. They keep the same loan files from start to finish. The institution I was with before, I'd submit a loan to underwriting. It was next in the rotation. I never knew who was gonna get it, but it caused a lot of issues because they'd look at what the previous underwriter look at maybe, and then they disagree with their conditions and add more conditions. Anyway, it created this fiasco that was nuts, but we'd have to wait to try to get every condition in, hoping that we were done, because they only wanted to look at the file initially, mm-hmm. and then when we were done. So 2 touches, and that's it. But you know how it goes.
Yeah.
I mean, you get a bank statement from somebody and it shows something that you weren't expecting, or the underwriter wasn't expecting, and all of a sudden you got another condition.
Yeah.
And they look at your pay stub and they say, oh, they have overtime. Here's another condition.
Yeah.
What a mess.
Or if you're forced to appease an underwriter that doesn't want to be bothered and only wants to see it once, so you kind of hold on to things while they're gathering things. That could take sometimes 10 to 14 days to get everything together to be able to submit. And what about that person that maybe you discover something and that kind of can kill the deal down the road? How important is it in our philosophy in the company we're with right now at Premier Mortgage Resources, our underwriters want to touch that file as many times as possible. So what I feel that does is allows us to be able to get those items checked off up front. I mean, as quick as you can get them in. Well, here's a pay stub, let's get it into the underwriter. Here's a W-2, let's get it into the underwriter.
Yeah.
Whatever it is, let's get those things checked off so we can continue down the road. So we're avoiding that 11th hour, oh, guess what? This didn't fit. This didn't work. Your income wasn't right. You didn't have enough hours. Whatever it could have been. Number of things could pop up. So to have an underwriter that wants to see it and wants to see it early and often, it's just so nice.
Yeah, and the optics are the same whether you have an underwriter that looks at it twice, mm-hmm. or because from the client's perspective, mm-hmm. Say we have it for 2 weeks, and the time frame is still the same, no matter how many times an underwriter's looked at it. And so you could have the disappointment that comes along with, hey, we've had this loan for 2 weeks, we've looked at it twice, I got this whole gamut of conditions. Or you can have a situation where the 2 weeks is the same. Underwriters looked at it every time a document's come in, like, oh, we got our bank statements. Underwriter, take a look at this. That seems overbearing on an underwriter, and I'm grateful that Premier Mortgage does that.
Yeah.
They look at everything, because that 2 week span is exactly the same. And the worst thing that you could ever hear as a loan officer is, you've had my loan for 2 weeks. What have you been doing?
Yeah. Yeah.
Instead of, hey, we've had your loan for 2 weeks and we're done.
Yeah.
I mean, the emotional toll on its own is way different.
Well, and think about it. If you're going to have to let somebody down late in the process, which you never want to do, it's good to get those things checked off. But if you have to, think about how catastrophic and how hard that can be for not only your borrower, your buyer, your borrower that's buying this home. They don't want to be let down, especially getting all the way to the end of the process. The agents involved, whether that's a buyer's agent or the seller's agent, they want to know as quick as possible. If there's bad news, give it to me quick, So that's, I think, in our world here where we work now, is we're able to get those things out of the way. So if anything does come up, it's going to come up quick.
Mm-hmm.
It's always better to have that earlier no than a long drawn out maybe that turns into a no, because those are not good for anybody. The seller needs to move on.
Well, and that's, I mean, when we were looking for places to go and Pre-Mortgage crossed our path, that was initially the first thing that attracted us to them, that Accelerate program.
Yep.
Where, I mean, even when all the people are shopping for a home, are not sure where they want to live exactly, we pre-qualify them, which we'll talk about in other episodes of what that means. But we'll pre-qualify them initially and then say, hey, we need these few documents, get them to us quickly. And even though you don't even know what property you're going to buy, we want to underwrite this.
Yeah.
We want to approve this with credit, income, and assets, which of all the conditions that we ultimately need, that's 3 of the 4. The last one is what's our asset value? What's our value for our home?
Yeah.
And so we can eliminate that terrible blow of being disqualified at the end of the process, even before they select a home, and say, hey, you're completely approved. Let us know what house you want to buy.
Yeah. How sweet is it to be completely approved, to have all that part out of the way, the borrower's checked off everywhere, and now it's just go, hey, find a home. Get with your agent. Go find that home. Give us that contract. Write that contract. Give it to us. Let's get an appraisal going. And then the whole time restraint then is the time it takes to get an appraisal. Mm-hmm. And, do a little disclosure towards the end, and we're able to go to closing. And it just makes our transactions close so much quicker with so much less hassle.
So accelerated file coupled with a kick butt team.
Mm-hmm. Success.
I mean, in your experience and my experience, we've talked about this. This has got to be the most put together company that we've worked for.
For sure. I mean, remember those nights? I mean, we both worked for, places at times in our career, especially in the banking world, with times in our career where we had, people that we had deals that we stressed about, right? And you go into a Friday and you got that uncertainty. The underwriter hasn't gotten back to me. We don't see that here. We don't see that. That's not something we deal with now. But in those previous lives of ours, working for other places, you had that uncertainty, and it's like, gosh, the borrower, the agents, they just want an answer right now on Friday, and I can't give it to them. And then your weekend is destroyed. I don't care if you're going on the best fishing or hunting or camping or hiking trip, family trip, whatever it is, Disneyland, you're going to go in there with the worst stress and anxiety hanging over you, just hovering you like a cloud. And I'm so glad that's something, we talked about this. That's something that we don't feel like we carry with us like we once did in our careers.
Yeah. And along with that is if we are going camping or hunting or hiking and whatever it is, we always know that our clients are in amazing hands. Yeah. Because they can get a hold of our team anytime, even at midnight, apparently sometimes. I don't encourage that. But they're there. And if we leave the scene for a day or two, we know that they're closing on time or early. Mm-hmm. I've never had a deal close on time here. It's always been a week or two early. Yeah. I've never had one close at the settlement date. I've never had an agent say, man, I wish you could have done that faster. No. It's always been like, hey, we're done. For real? Why? Why are you done? Good feeling to be able to deliver every time before it's due.
Yeah. Exceeding expectations is better than meeting them. I think it just resonates so much better with everybody. I'm excited about some of the things we're going to do on these podcasts. We've already got, scheduled different people that are in this home buying process, different professionals from real estate agents, insurance agents. We're going to bring in appraisers. We're going to talk to people on every part of it. So it's not just a lending perspective. We don't want this. Obviously, we talked about this many times. We don't want this. Our goal is not for this just to be on lending, kind of like we talked about today. We want this to be on all things home purchase related. We want it to be about, what does it take for an agent to be effective? What are appraisers seeing going on with home values right now? What does the future hold? And we've even talked with our secondary division, which are the ones that set our interest rates and work on the interest rate market. We're going to have them, remoted in so they can talk on what their predictions are with the interest rates and how things are looking, how volatile are things. So we're going to get some real professionals in here to give us, their opinions and their professionalism on those very topics. And I'm excited to have that.
Yeah, coupled with that, we're going to be talking about a lot of ways that first-time home buyers can buy a home. And it is that pie in the sky thing that a lot of first-time home buyers that want to buy, they don't think they can.
Yeah.
And, you and I have both had people come in, I'm not going to qualify, but let's get it going. We give an application, get it figured out, and say, hey, not only are you qualified, you're qualified above what you wanted to buy.
Yeah, how sweet is that?
That's awesome. And we can talk to them about 100% financing programs, how that works. We talked to our first-time home buyers in depth about, the do's and don'ts. Like, don't go buy a Corvette.
Yeah, that story. I'll share that one right now. I mean, that first-time home buyer, we're ready to close, and it's the week of, and I said, hey, we're closing on this. I think it was like on a Monday or a Tuesday. Well, that weekend before, we already had documents at closing. Closing day was scheduled. We go to the title company to close, and they're all lined up, and I get this email that said, hey, we just checked this. An alert came through. Brand new debt. He went down to Las Vegas and bought a Corvette. Not just an old Corvette, a brand new Corvette. And the payment on that Corvette was going to be larger than the townhome he was buying. Naturally, the deal fell apart. But that's as you just said, the don'ts. I mean, how important is it not to do the bad things, especially during the loan process?
Yeah. I went to a signing and met clients. They were there before me. I showed up a few minutes late. Saw this beautiful brand new F-350, the dealer sticker on, new dealer temporary plate on there. And I just closed my eyes and said, it better not be. Please no, please no. And I walked into the closing room and said, hey, that's a good looking Ford out there. Like, yeah, just picked it up this morning. And I said, no, you didn't. Oh, yeah, it's going to be great. And the garage is perfect. It'll fit right in there. And I said, oh, my gosh, man. That garage is going to fit something, but not your truck. And it was really sad. Really, really sad. But a lot of things that these first-time home buyers, they just don't know because they don't know what we're looking at. And to peel back that curtain and say, this is what a lender really wants from you as a buyer. And at the same time, buyers, this is what you really want from a lender is incredibly valuable. And so, yeah, we'll be picking that apart quite a bit in these subsequent episodes.
Yeah. And we'll talk about a lot of these different things, like don't quit your job right before closing.
Or even right after closing, because I had that happen too.
Yeah, that's true. That's true. You got to stay at your job.
Stay at your job.
We'll cover a bunch of those, but it's going to be fun. Kind of bringing first-time home buyers in here to talk about their experience, to kind of shed a light, for these viewers to know that, hey, if it's possible for them, it's possible for you, and hopefully their stories will help give people hope. 'Cause that's the whole goal here: is hope for home ownership.
Yep, it is attainable.
Yeah, and we're going to gear these things, which I'm excited. We've been brainstorming different topics to talk about. Talk on some episodes where it's really geared for that seasoned investor, not the guy that's just buying their first home. We're talking the people that maybe have, 4, 5, 6, 8, 10 different investment properties. What are the options for you? What would be the best thing to do? What about, do you retain this one? All kinds of things when it relates to loan programs that will help them achieve those goals for their investment portfolio. And we have tons of answers with that. So that'll be fun as well.
Yeah. Yep. And, the strength that this company has and our experience in it is we're a direct lender. We'll talk about what direct lending means, but we have the ability to broker too. And we'll talk about what that means. But to be able to have every ability at your disposal to be able to get things done is, there's very few companies that do something like this.
Yeah. And then to have the ability to do loans in just about every state in the nation.
For real.
I think that right now we are licensed. I just read something. We even got the 50th state done now. So it is, I believe, every state in the nation. So we're there. Well, that'll be fun as I move our way towards that through these next episodes. I'm looking forward to it. Anything you want to add before we close?
No, this is a unique thing to be able to have this kind of perspective from a homeward bound perspective. And so I would just say, for those that are choosing to follow us on YouTube, podcast, wherever it is, this is where you're going to find a lot of answers. And we hope you continue to follow.
Yeah, especially no matter what state you're in, no matter how you link up with us. We're located obviously in southern Utah, but we are licensed in multiple states. But we'll be talking some parts of this. It'll be kind of aimed at the local market, but it applies everywhere. So come on, enjoy the ride. Hopefully we'll give them the answers that they want.
Yep. Homeward bound.
There we go.